Good afternoon, everybody. Craig Asano. I'm the Executive Director of the National Crowdfunding Association of Canada. We're excited to embark on our first official, unofficial interview, something that we've been wanting to do for a while, and we're going to do it as part of a series, and the idea is just to introduce to other members some of our featured members that have a lot of exciting news to share. The National Crowdfunding Association is Canada's leading association in the crowdfunding space. We work with over 1,300 members comprised of companies, investors, and industry participants like Cato Pastoll here today from Lending Loop. So we're excited to have him here in the NCFA office. I think everybody in Canada that is following the crowdfunding sector has heard a ton about the disruptive potential of peer-to-peer small business lending markets. So that is exactly the business model that Lending Loop, which Cato and his partner Brandon, I believe, has founded. So I think that's sort of a good segue into our interview here. Introduce the concept of Lending Loop and maybe provide a little color in terms of where you've come from and through that journey and where you're at today.
Yeah, absolutely. So obviously to kind of give you a little bit of context there, Lending Loop is Canada's first peer-to-peer lending marketplace focused on small business lending. And really what it is an online marketplace that allows anyone from across Canada to lend money to growing small and medium-sized businesses. So my name is Cato Pastoll, and I'm the CEO and co-founder. And together with my co-founder, we brought this model to Canada because we really wanted to solve the problem that is small business lending. There's a lot of small businesses right now that are left behind in terms of the credit market. If they don't get a loan from a bank, their only real option beyond that is a high-cost private lender. And leveraging the power of the crowd and the retail public is a tremendously powerful tool that will allow small businesses in the Canadian economy to thrive. We've seen in other markets such as the US and the UK how powerful this type of business model has really been. And we really wanted to bring that compelling solution to Canada and bring it to Canadian small businesses so that they really had a better way to borrow.
To give listeners some idea of the size of the lending business marketplace internationally, and I know in the US, this has been a thriving market, and we often talk about, the crowdfunding industry in 2014 is worth $16.2 billion globally. That data comes from the Mass Solution report, which is a well-known and accepted report, and the lion's share of that number, I think it's 65%, comes from the lending-based or debt-based crowdfunding. Could you share with everyone a little bit more in terms of what's happening in the UK, maybe some of the platforms out there if they wanted to check them out, or maybe what's happened in the US, and so they get a better flavor for what it is that we're talking about? Because I think in many regards, it's exciting that you're here because Canada is always at risk sometimes of falling a little bit behind some of these trends. And so can you talk about that a little bit?
Yeah, absolutely. So, to your point, since 2008 to 2010 is really when these platforms started to be established and start to flourish in markets like the US and the UK. In the UK, there's now a number of SME lending platforms out there. Probably the most notable of which is Funding Circle, and today they've originated almost close to £900 million of credit, and that's solely SME credit that's really been funded by the public. And when you look at the potential for a market like that, it's quite overwhelmingly positive. When you look at the size of the UK market versus the Canadian market, while it is double the size, the impact that it's been able to have in the UK economy is really quite something. So it's had such a profound impact actually on the UK economy and on UK small business that the UK government has actually gotten behind Funding Circle and actually contributed over £50 million to lend specifically through that platform. So I think it's really exhibited the growth of not just this model and not just the crowdfunding aspect of it, but actually the tremendous impact it can have on the economy as well. I think as well, if you look at markets such as the US, where you've got the dominant platforms such as Prosper and Lending Club, you're now starting to see those platforms really start to venture as well beyond just individual and consumer credit, but into small business credit because of the potential for impact that it can have. So I think when you look at those economies and you look at the major platforms there that I think everybody knows and identifies, it's quite something to see the rate at which they've grown to be able to originate billions of pounds or dollars respectively of credit.
So these larger lending platforms in the UK and the US, Funding Circle and Prosper, and I know there's 40 billion and there's a whole bunch more. Are they? Let's just talk a little bit about. Are they traditional peer-to-peer models, or is it really just repackaged institutional capital? Or what is the source of capital, and what is their model? And then maybe we can get you to talk about Lending Loop's model and how you see that as an opportunity and what role you're trying to fill, and perhaps how it works within the existing options for small business to get a loan.
I think that's a great question. If you look at how those platforms started out originally, obviously they've evolved a lot in the last 5 to 7 years, but all of those platforms originally started by taking in retail capital. So the primary source of that credit, or the only source of that credit originally, was kind of the crowd, the retail public who were really helping to fund those loans. And that's even still true today. A lot, obviously, nowadays is being said about how much institutional capital is being poured into platforms like Prosper and Lending Club. But I think that's not without the success that they had proven already with the retail public in their early years. And I think what they were really able to do between 2008 and 2012-13 is prove out that credit models and prove out that business models, which through allowing individuals to invest in that platform, which allowed them to gain that credibility and allowed them to actually build up their platforms to the point that now, of course, the big institutions that have large sums of capital are interested in investing. And to go into kind of your question as to the type of model that we're operating, we're trying to follow that similar trajectory. So rather than going to institutional capital today, which obviously is one route and one solution that a lot of platforms are exploring and looking at, we wanted to go to the retail investor because we really wanted to make it as compelling as possible to small businesses. If you go without that proven credit model and that proven track record, what ends up happening is you end up getting a much higher cost of capital. And ultimately, there's no differentiation then between a peer-to-peer platform or a marketplace platform and a high-cost private lender. So by actually leveraging the power of people and leveraging the power of the crowd, those platforms early on were able to source capital at a much lower interest rate, prove their business models, and get to where they've gone to today. Just to cap it all off, I think that the story of Funding Circle is one that we kind of look at and is one that I think exemplifies the whole space, where they really predominantly relied on retail capital for the first 4 years or so of their operations. Now, a lot of institutions are starting to provide that credit as they start to go up into the $1 billion mark or £1 billion mark. But I think it's not without those first few years of really proving out that the individuals and the individual investors are going to have faith in platforms like this that leads to that ultimate success. And to that point, we really want to follow that same trajectory, and we want to really we never want to alienate the individual investor. We always had in mind building this platform for the individual, for the crowd, to be able to participate and to be able to help out small businesses both in that community and across Canada.
Right. So yeah, no, it's fantastic. I mean, the growth and the trends. If you're not following what's happening in the peer-to-peer and lending marketplaces, you definitely have to check it out. There's a ton of literature and data that's coming out of Europe, in the US, and soon here in Canada as well, with various research partnerships. So I know that many may not, or they may have seen that it's exciting news that this week, which is the week just before Thanksgiving weekend, you had sent out a press release at Lending Loop. You were officially launching, and can you explain a little bit about what's involved? Is this a soft launch? Is this business is open? And what sort of traction you're getting, and how is that all looking from where you're sitting?
Yeah, so actually, to your point, this week we did put out that press release, and we are officially open for business, which is tremendously exciting. We've been working on the project for about 1.5 years now, and it's been a really tremendous experience getting to where we've gone to now. We are open for business, and we've had actually hundreds of lenders from across Canada just this week come on to sign up to be part of the platform and start to participate, which is really encouraging. And we hope that number only continues to grow as we really kind of start to get the word out there and start to let more and more people know that this platform, which has been so innovative and so exciting in so many different countries, is now available in Canada. Similarly, on the businesses side, we've actually been accepting businesses' applications since June of this year. And that was kind of on the soft launch model where we were a little bit quiet about what we were doing, but we really wanted to assess what type of small businesses were out there and who really needed access to credit. And we think we got a really good story of that in the last few months while we've been kind of building out our processes and building out our business models. So we now have some fantastic small businesses lined up. There are some of which are already listed on the platform and some of which will be kind of coming on over the next few weeks that are looking for capital and looking for people from across Canada to help them out. So it's really exciting, and I really hope that anyone who's watching this comes and checks out the platform because it's something for I think there's something on it for everyone.
And in terms of the platform and credentials and getting signed a PIN and a password, and can anyone just view the deals that are listed or the potential offers for loans without signing up, or they have to sign up, or how does that work? How do they go about signing up and getting an account?
Yeah, so it's a fairly simple process to sign up. Obviously, there's certain steps and certain measures we have to protect against things like fraud, etc. In order to essentially sign up for the platform, you fill in some basic information about yourself. You then have to provide some information to verify your account, so that's really to verify your identity. One of those ways is to actually do it in person, which is the old school way of doing it, but there's a lot of new online techniques that brokerages like Pletstrade are using, if you're familiar with them, so we can verify your identity online. The last step to kind of opening an account with us is then to actually put money into your account. And the reason we ask that people put money into their account before they're able to see the deals on the marketplace is we want to protect the small businesses that are coming onto the platform. So we want to make sure that people are signing up are legitimate people that are serious about lending and serious about helping out these businesses, because we don't want people signing up for the sole intent of looking at a business's financials or looking at their situation. We really want people who are interested in our platform and interested in helping out small businesses in their communities.
Okay, cool. Well, since it's a marketplace and you have small businesses that are seeking capital or small loans, and then you have investors who are basically providing loans. So let's talk a little bit about both parties to be holistic here in the marketplace. From a small business or issuer's perspective, or a company that's looking to get a loan, what kind of companies should be considering to use Lending Loop? So I guess maybe of the hundreds that you've been receiving since you just launched, a little profile of who's using it today and who you really like to see use the platform. And I mean, you've obviously had a target market and going after, you're building on that market. That's fantastic. Can you just provide some information on what does a small business need to know and how do they get connected and who is this for?
Yeah, so we, from kind of inception, have really been focusing on keeping the platform as open as possible to small businesses. Going back to kind of the beginning of what I was saying, we really built this platform to offer a more compelling solution for small businesses in Canada to access capital. So, I would say any small business owner who's going through some trouble or actually needs capital to expand both of those sides of the spectrum, we definitely encourage them to kind of come on our platform and see whether we can help them out. We do have a credit evaluation process, so we don't let anyone come onto our platform. That usually takes between 2 and 3 business days from the time that a business applies to the time that we actually give them an answer as to whether they can or cannot be listed. So we have a pretty quick turnaround there. But we really are kind of open-minded to the type of small businesses that we're offering, because we've seen how many different small businesses early on in many different sectors and many different industries and many different parts of Canada need access to capital. And for that reason, anyone who's looking for anything up to $500,000, we really encourage to come onto the platform. Going into kind of why that gap exists and why we exist, we believe that the banks do kind of offer a compelling solution for the businesses that are in that $1 million plus mark, but there's nobody really servicing that segment below. So going back to that point, we really wanted to offer something that any business within that sector of kind of 5,000 to 500,000 and potentially in the future up to $1 million can get a better way to access capital.
a small business who is looking to raise up to $500,000. That onboarding process, you said that was a few days to investigate and make sure that they've passed the test, I guess.
Yes.
I'm assuming some of that's proprietary, but can you provide a small business, what sort of assurances do they get, or what sort of checks do they have, or how do they know it's a credible process?
Yeah. So we built our process with small business in mind, and one of the things that we did early on is establish that basic framework in which businesses can securely provide their information to us. So from a security and due diligence standpoint for the actual companies providing the information, we work with top in-class kind of data providers and data service providers to make sure we're not actually handling their information, and it's all kind of handled as well for the lenders in a safe and secure manner. In terms of the actual information that we ask them to provide, so there is a pretty simple online loan application that takes between 20 and 25 minutes. It's a dynamic loan application that asks them questions dependent on what they need the loan funds for. And then they're asked to provide some high-level information about the business in terms of what they do, the description of their loan, and then provide things like financial information and notices of assessment, so we can actually prove sort of the financial information related to that business.
And so most of the small businesses that would be seeking loans from Lending Loop, you think most of them would have this information readily at hand, and it's not too onerous. And the next question I would have, I'm thinking like my small business had, an entrepreneur, how much is this going to cost me? Is this, I see it's going to take a few days, I've got to get some information which is sensible, they can learn about the loan, why we need the loan, that information is going to be used to help present the offer to potential investors. So how long does it take for that? Like what happens there? It gets listed, and are there fees involved?
So that's kind of the other great thing for small business. There's no cost to apply, and there's no cost at all until you actually get your capital. So that's when you're 100% funded by the marketplace. If you're not 100% funded, you walk away, and there's simply no cost to have gone through the process. So we really wanted to build something that was compelling for small business and was easy for small business. Actually, right now, if you look at what you have to go through with the bank, it takes on average 32 hours is the statistic for how long it takes from when you walk in the door to the time that you actually get your loan documents. So we wanted to build a process that's a lot more compelling than that. And from a cost basis as well, there's no application fees, there's no cost to filling anything out. It's probably a maximum of an hour of your time, that if you've kind of got all your documents together to your point and you're an organized business owner, it will probably be under half an hour.
Half an hour, 32 hours, okay. So given the nature of the marketplace we're talking about, we want to talk a little bit about from a potential lender, and they are looking at these products and investments, and what's in it for them, and how is it going to work after I'm assuming there's no fees involved for them to set up an account, and they can immediately get, do they get email with potential deals, or is it just a marketplace where they go and use a couple of filters? How does that work?
Yeah, so the marketplace, once they've signed up, they've got money in their account and they're ready to go, the marketplace is a full marketplace that is open to anyone. So they actually they log on, and right in front of them they can see all of the deals that are available for them to lend to. They can actually click into a specific deal and see that information that the business is provided. So they can see kind of summary level financials, they can see the description of the loan, the reason that the business owner has actually asked for a loan, and why they believe that they're a business that's safe to lend to. So there's a lot of kind of fun and interesting ideas that we've put into the platform that give the lender as much information as possible about the business without disclosing too much information that would put the business at risk. There's also a kind of interactive Q&A panel as well. So lenders can actually log on and click on a specific business that they're interested in and ask the business owner a question if they want to clarify something. So if they see something funny in the financial statements, or they see something interesting in the description, they can actually ask the business owner a question, which they can then reply to. The other cool community aspect of it as well is whenever you're lending to a loan, you can actually see all the other lenders that have lent alongside you. So there's a tab on each loan listing, which gives a full list of all the lending partners and how much they've lent. Of course, that's given by username to protect the privacy of the lender as well.
Yeah, you can see a lot of similarities, I think, in, you were talking about the Q&A back and forth in the equity crowdfunding markets. Those are the deal rooms that, founders and investors, they need to come together, and there's no better way than sometimes the Q&A that can happen either by video conference or I guess in these deal rooms, it's almost like a chat room and email, but it's organized around a transaction. So I'm really pleased to hear that that's happening on the lending side. So taking that step further with all the social media and marketing as a huge tool to help increase the distribution and awareness of some of these offerings, is that come into play? I mean, I'm talking about the social sharing button. Can you, as a potential lender, introduce that to other lenders in your circle that might be interested in this? Is that something you've got today, or is that something you're thinking about?
Yeah, it's a good question. It's not something we have today. So right now, it's really kind of an individual experience that you have with the marketplace. So you're not able to kind of share information about the deal, and that's for numerous reasons right now. But we do love the social aspect of lending and investing, and it's definitely something that in the future we would look into. But right now, the interaction with the marketplace is more of a kind of one-to-one type basis where a lender logs on and sees the information for themselves. Of course, we always promote people to kind of share news about Lending Loop as things come out and new listings come on the marketplace. We always keep our own lenders informed of that. So, we like to kind of create a community internally. And over time, if we can kind of move out into social circles via social media, that would be something that would be very interesting too.
Okay. So I'm an investor. I found the company. I want to have, do I get to control exactly the dollar to the dollar that I want to invest, or is it in lots of 100 or 1,000, or how does that work? And then also talk a little bit about the returns, and from a product perspective, these are good opportunities to not just support a community business that needs a loan. That's a great aspect of the lending marketplace business, but they want a return. And let's talk about the benefits for investors of getting involved in these markets.
Yeah, I think there's a number of elements to kind of the question that you asked. The first element of how much can you lend? You can lend in increments of $50 starting at $50. So that's really what makes this type of investing accessible to pretty much anyone, is that you can start with as little as $50 and build up in increments from that. What really makes peer-to-peer lending such a compelling kind of initiative and such a compelling offering for lenders is that lenders are actually able to diversify very easily. And what I mean by that is, as long as you're lending $50 to 100 different businesses, so an aggregate of $5,000, that means that you have an element of diversification to your portfolio. So even if one or two of those businesses end up defaulting on their investment, which is entirely a possibility, you should still be covered and still should be making a positive return on your investment. So really, whenever we kind of onboard a new lender and whenever we send them materials, one of the things we really kind of emphasize is make sure that you're building a diversified portfolio when you're picking and choosing the businesses that you're lending to.
So there's a lot of education on the portal in terms of safeguards or how to look at these deals. What about tools to help assess risk or de-risk or reduce risk from an investor's perspective? You got all these deals. How do they know that particular lender has the right sort of offer and credibility and ability to pay back so they can make an effective decision?
Yeah, there's definitely a trust factor. That's where the kind of the interesting part of peer-to-peer lending comes in. Of course, we do our own due diligence and we assess the creditworthiness of our platform, and we have a lot of tools and measures in place to make sure that we're onboarding businesses that we believe are both creditworthy and have a strong capacity to repay. But ultimately, the decision to lend falls on the lender, and if not enough lenders want to lend to a loan, then that loan simply doesn't get funded. Not too dissimilar from the crowdfunding world, where if you're on Kickstarter and you don't get the amount that you need to get pledged, you simply don't get your funds. So there's that similar aspect in play, which means that ultimately the ultimate credit decision, if you will, falls on the lenders. But we have a lot of things in place that make sure that we're only onboarding creditworthy businesses. And we try as well to make sure we work with the business to price the risk of each loan to be proportionate with the default rate, or the loss given default, as we call it in the industry. So as long, again, as you're diversified, your kind of net return after your fees and after your bad debts is still going to be positive as long as you're building a diversified portfolio and lending from high-risk businesses to low-risk businesses in an equal and fair proportion.
So who manages the loans after they've been made? And you touched a little bit about undersubscribed loans. If in like a Kickstarter world you don't hit the target, there's no loans that happen. And I guess you could do the inverse, the oversubscribed version. But really, who administers the loans, and are these loans securitized loans? Are they unsecuritized loans? It sounds like it's a crowd-oriented loan. Not securitized at $50 an investment, and the business is in the marketplace that has gone through a series of checks and balances, and it's not a free market. It's an opportunity to get involved, but not without risk. So maybe that's what we're talking about. Can you talk a little bit about the various risks and what happens in some of the outcomes, just so everybody can get a deep understanding of how the process is working and from your perspective?
So lending loop on every loan acts as kind of what's legally called the agent for the loan. So we're responsible for collecting the payments for the business and also dealing with any adverse events. So if the business misses a payment, or if we have to actually, if there's an unfortunate event of bankruptcy where we actually have to go in and collect on assets, we're actually responsible for doing that on behalf of the lenders as well. And that's where there's some level of protection, because of course you can have 1,000 different lenders all trying to collect their $50 pieces of the loan. So they essentially appoint Lending Loop as the agent for the loan so that we can go in and actually make sure that the business is repaying and deal with any adverse events. As well, I think one of the interesting things about this is it's a secured lending as well. Typically, there is a piece of security on every loan, or sorry, I shouldn't say typically, on every single loan there is a piece of security. That might be a general security agreement, or if the business actually has assets which we can kind of take security on, we will do that as well, and that's kind of proportionate with the risk and the interest rate that the lender is paying. So ultimately, there is some element of security there. We're not going to call it totally secured lending, but I wouldn't call it entirely unsecured lending either, because there's definitely that element factored into the risk models, and that's how we're able to kind of price this credit lower than what those high-cost private alternative lenders are, because we're looking for those more prime to emerging prime businesses as opposed to those subprime businesses to borrow through our platform.
Okay, great. So, we talked a little bit about businesses. We talked a little bit about the opportunity for investors to look at these new markets, and the one piece that we didn't is the administration, which we've just learned is managed through Lending Loop. And we maybe talk a little bit about the resources at Lending Loop to manage that process, and also the returns that are going back to investors. Is that something that would get put back into their account at Lending Loop, and then therefore they can have a portfolio, they can roll those returns on? Yeah, that's the idea, of course, right?
I think you answered the question. Yeah, so whenever you receive a payment, and all payments are monthly, that payment goes directly into your Lending Loop account, at which point you have a couple of options. One, you can redeploy that capital into a new loan to help out another business, or of course you can take that capital out and use it at your will. So that capital that is kind of not lent out to businesses is always readily available to the lenders.
Well, it sounds like an incredibly exciting time here for sort of peer-to-peer lending, and I'm interested in looking at the data in terms of how much of those loans, what percentage are going to be paid out month to month, and how that grows. So I guess we're kind of getting to the concluding part of this informal sort of discussion, and I've learned a lot actually about what you're doing at Lending Loop, and it's very exciting to me. Let's lastly just touch upon maybe the trends of where you see lending and peer-to-peer lending markets going internationally and in Canada from here. As we heard, your model at Lending Loop is largely fashioned off of a lot of the successful best practices that are occurring in all these international jurisdictions, and we could use that old expression, why not here in Canada? The trends. Where do you see this going? Maybe 1, 3, 5 years kind of time frame, and how do you envision Lending Loop's role and your goals over the next few years?
Yeah, absolutely. I think that's a very interesting kind of question you raised. Why not here in Canada? And I think the thing that we have to keep in mind is Canadians and the Canadian kind of culture and people across Canada and the government as well needs to kind of embrace and foster this new type of innovation in lending and in the financial sector. Of course, we have seen that innovation happening for a number of years now in other countries and other environments. And I think it's very, very important for Canada to have its own solution. Of course, we want Lending Loop to be a part of that solution, and we really built it by using, to your point, the best practices of some of the other international platforms, but also making sure that we have a kind of uniquely Canadian twist to it. So I think, our vision for the future of Lending Loop is really to play on that, to make sure that we're bringing financial innovation to Canada, primarily right now in the lending space, but over time, I think there's a lot of innovation that can happen across the financial industry, whether it be lending to small businesses, lending to consumers, whether it may be something kind of more innovative, such as insurance. There's a lot of potential sectors which, new fintech companies, as they're called, can go, and we want to be at the heart of that. We want to be the Canadian solution that's bringing that innovation across to Canada.
Yeah, the World Bank, I believe it released a report recently on the 6 biggest disruptive trends, and certainly lending and crowdfunding and fintech and payments and global transfers of this is the blockchain technology, sending funds from point A to B for net cost of zero, and how the banks are going to react to that and deal with that. And then all of these social trends enabling individuals, peer-to-peer, they're really just individuals, or I'm assuming some businesses as well, can get involved and have those loans go out to businesses that they know that they can connect with, that there's Q&A, and have a mechanism to track that and get paid out on that. And it's all above board. So I think that represents an exciting opportunity here in Canada. And we wanted to wish you, the best of luck with the launch from today at Lending Loop. It must be incredibly busy times. So thank you so much for coming in.
Absolutely.
And you have any last final parting words to anyone, maybe the website or any sort of any last things to say?
Yeah, no, anyone who's watching and anyone who kind of is interested in the space, I think should definitely check out our site. It's www.lendingloop.ca. If you're a borrower who's interested in a new way and better way to access capital, or you're a lender who's kind of interested in a new way to diversify your portfolio and a new asset class, definitely check out Lending Loop for kind of more information and to sign up and open an account. Perfect. So thanks for your time. Thank you. That's it from the National Crowdfunding Association of Canada's boardroom, as it were. Signing off, and we'll see you around for the next featured interview. Take care.